Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about how the market rewards risk. So imagine risk as the money you are, putting up front in order to make a profit. So let's say you have $100 stock on your hands. If it goes to 80, you sell. That's your stop loss, right? You set that for yourself. If it goes to 150, you sell most of it, if not all of it. That's your price target. So you're risking $20 for 50 in that scenario. All right. But looking back at COVID times, March of 2020, most of the tech stocks, especially like the software type stocks, fell a lot more than, $20 if they're 100. They fell, 50, 60%. And when you took that risk and bought in, you were rewarded handsomely, right? Because the more it fell, the more it went up. Eventually, that's just how it worked out in the end. But let's just look, right? Let's look and analyze risk to reward, if not just risk itself. So let's look at Square, right? Wealth Squad is all about Square. Back COVID times, you can see if I do year and zoom back, the stock fell, 55% in a month. And that's a lot, right? 50, it was cut in half at least in a month. You buy it at this 39.40 range, right? And you hold it, and your stock goes from 40 to 280 essentially in a matter of a year, right? You can see March to May, and right here, February, March to May ish. So, a couple days less than a year, and you're making 500% at least. Now, what this tells us is the market rewards risk, right? You took a risk buying Square at 39 because it's a volatile stock. You bought it at 39.40, and the market was rewarded, right? The market rewarded you within, let's see exactly, within 2 months, you're already backed to previous highs, and within the year, you were times 3 almost the previous highs. Not more than times 3 the previous highs. So let's analyze this. We analyze that. Now let's look at current times, right? We see Square down 62% in a matter of 120 days, and compared to 30, right? So 4 times longer, a little bit more, down more, but it's still that risk to reward we're looking at. Square's been at this price before, back in September, October of 2018. So you're buying at 4-year prices essentially. Go back 4 years in time to October, and you're buying at the same price as of right now, which is crazy to think about. But anyways, you're taking a risk if you're buying now that the market will, potentially reward you in the future when it recovers in a little bit and then it keeps going. So these volatile stocks are best to buy in these, bear market type corrections because they fall the most, right? That's what I'm trying to get at. So let's look at, I just pulled up software application and ranking by market cap. Let's just look at some stocks that I know went crazy. Trade Desk. Yeah, Trade Desk. All right. So we can see exactly what happened during COVID. Of course, if they're software stocks, they benefited during COVID. So it's a different company than it was back then. But, really looking into it, it's a strong company. So let's see. Went from 30 to 14, 15 in a matter of 20 days, 28, right? 55%. From 14, we see prices now of 60. Okay, so you're up 300%. At one point, you were up 600%. So it rewards risk, and when a stock is falling a lot in a little time frame, it's best if you buy in. If it's going bankrupt, obviously maybe not, right? But if it's a solid company and it's falling a lot and it's fallen a lot before and recovered, it's probably not a terrible buy, right? DocuSign. Let's look at DocuSign, a company that's benefited huge from COVID. Not even a question. All right, let's look. 2020, we can see the stock barely fell from 95 to, oh, I guess it fell, but compared to others, it didn't really. So we can see from 90 to 60, and from 60 to once 300, right? So you're up 5 times. Um, Now, maybe these software stocks are a bad example. What I'm trying to get at is small, volatile stocks in general tend to do very well. Let's, think of something else here. Technology, let's do communication equipment. Let's do internet retail, of course, did well during COVID. Restaurants and casinos did terrible during COVID, right? Because they were all locked down. So let's see, some small stuff. Uh, Penn National Gaming, right? This is a great example I've talked about before. Penn National Gaming was a $4 stock at the very worst of COVID, right? See, it's $4. So you're buying a company that was once 38, now 4, down 90% in a month, mind you. Now was once trading above 100, above 130 for a short period. Now, still at 40, you're still up 10 times, but you could have been up a lot more. Now, buying these stocks when there seems to be no hope left is seeming to be a solid investment strategy, right? Uh, Casino stocks during COVID, uh, cruise ship stocks during COVID. If I could find that on here, we'll just look that up. So what you should be doing is thinking of what's next, right? What's going to be, there's no hope left, sell all, and how could you pick up at that time, right? So we're buying for 8, within 2 months we sell for 24 or 30, right? If you buy at when it's down, 90%, it's a very tough way to lose money, right? Carnival has just not been doing good in general, right? 72 to 8. Um, Still hasn't even fully recovered, and maybe it will never will. But if the stock were to drop to, a penny stock, you might as well pick it up. Are you kidding me? It's not like a company's gonna try and go bankrupt, right? They always want to recover and make more money, and they're not gonna be doing that as a bankrupt company. So just mind that these small, volatile, no hope left stocks are usually, not usually, maybe usually actually, sometimes a solid investment because you're risking little, right? The risk is it goes bankrupt or goes down even more, which is rare or unlikely. And your upside is, whatever the however much it fell plus a whole much more. So, think of this during now. Think of what stocks come to mind of, no hope left, sky is falling, going bankrupt, all that type of stuff. It usually won't go bankrupt, number one, and number two, it will eventually recover. So I hope this video helps you make some more money in this market. It is kind of tough out there. A lot of stocks have fallen a lot. SC Limited was a a darling of tech Twitter, right? Everyone owned this stock, and has since fallen from 370 to 120s. Now at 2020 levels, or what was the one I was just thinking of? Affirm. Now back to very low levels of May before Amazon even started working with them. So it's like you're crazy not to be buying at these prices. Some certain stocks, some stocks are still overpriced, others are solid, right? Good prices. So just look into stocks, do a lot of research, look around, turn over a lot of rocks, eventually you'll find a couple diamonds. I hope this video helped you in some way. If it did, please press the like button and subscribe to the Wealth Squad. We'll see you later.